What's up, everyone? What's up? It's your boy Sipo, and I'm back with another video. I'm back with a one of one of my requested videos, which is market structure, right? So yeah, guys, one of you guys requested this video, wanted to see how I map out my market structure, right? And how I do it and everything, right? And I promise to do it as a three-part series, which is higher time frame market structure, or like you understand, then the middle time frame, then putting everything together, right? So this is part one, which is the higher time frame market structure, right? It's good to be back. It's been a while. The reason this video took time to be out was because I've been, going through a lot in life, right? With life stuff and all those things. But I'll talk about that more on the coming vlog, right? I'm trying to get back to, to the balanced state, right? But for today's market structure, we'll be doing swing structures, internal structures, how that work and all that, right? So cool. So as we begin the video, I'm just gonna begin by saying, if you would like to, or if you're new to this channel, my name is Sipo, and I'm currently, documenting my journey, trying to show like people the real side of trading and trying to assist you guys by all means, understand? Yeah, so yeah, make sure you hit the subscribe button, hit the like button, and turn on the notification to get notified each and every time I drop a new video, right? So let's get into today's video. So what is market structure? Market structure is basically the way, like the movement of the market at that current point in time, or at the overall spectrum of time, right? So we have three types of market structures. We have an uptrend, we have a downtrend, then there's one that I didn't write about here, which is the sideways market, right? So in this video, we'll have a couple of keywords that I want us to jump over first, right? We'll have keywords such as swing high, which in our case will be the highest point that caused a low, right? So in that case, this is a swing high, this is a swing high, this is a swing high, right? Because it is the highest point. Let me change the color actually, to green, right? Because it is the highest point that led to what? That led to a low. You understand? So that is a swing high, right? So cool. So then one of our keywords as well is swing low, which is the lowest point that caused a swing high, right? So which is what? Which is the lowest point that caused a swing high. Understand? So that is what a swing low is. So this is a swing high, which is the highest point that caused a swing low. And then we have swing low, which is the lowest point that caused a swing high, right? So yeah, then what else do we have? We have internal structure, which is anything between a swing high and a swing low. So anything in between here, that is internal structure. Understand? So this is what I mean. This is internal structure, right? Because why? It is in between a swing high and a swing low. Internal structure, internal structure. Sorry guys if this thing is lagging a lot. I'm trying by all means to find a new platform, but yeah. So yeah, that is internal structure. Then one of our mostly used, like a keyword that we'll use a lot, is boss, which I think most of y'all know, right? Which is break of structure, right? Whenever a swing high gets broken in an uptrend, we call that what? Boss, which is break of structure. In a downtrend, whenever a swing low gets broken, we call that what? A break of structure, right? So cool. So yeah, after a break of structure in an uptrend, what do we expect? We expect a pullback, right? So, but we'll get to that in a few. Then, as for our annotation, this annotation, like the solid annotation, will be used for what? For our strong structure. What is our strong structure? Our strong structure is structure that led to what? That led to a break of structure, right? Cool. Then this annotation will be used for what? Will be used like the dotted annotation will be used for what? Will be used for our weak structure. Our weak structure is what? Is structure that failed to what? That failed to lead to what? To a break of a low or a high. Understand? So yeah, depending on the trend, right? So cool. Since we know our annotations and our keywords and all that, if you didn't get that, feel free to go back and re-listen to it until you understand it, right? But as for now, let's get to the gist of what this video is about, right? So cool. Here we have basic market structure, right? What is basic market structure? When we all started, we started from baby pips and trading books and YouTube, you understand? So in essence, we have three types of markets. We have the uptrend, downtrend, and sideways market. But for the purpose of this video, we're going to focus on uptrend and downtrend, right? So what is an uptrend? In basic market structure, an uptrend is when the market is creating what? Is creating continuous higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Understand? So what is a higher low? A higher low is a low in a, what is a high low in the in an uptrend. A higher low is a low that led to what? That led to a break of a higher high. Understand? So basically broke the higher high. This is a higher low. This is an established higher low. Understand? Then we got the higher high, higher low, broke structure. This is an established higher low. You understand? So that's basically what an uptrend is. A series of what? Higher highs and higher lows, right? So cool. Vice versa with the downtrend. What is a downtrend? A downtrend is a series of lower lows and lower highs, lower lows and lower highs, lower lows and lower highs, right? With what? With our lower highs doing what? Breaking our lower lows, you understand? Leading to our lower highs being what? Being strong structure because why? They led to a break of structure, right? So when do we fully establish where our our lower high is? We know fully that our lower high is established when it does what? When it leads to a break of this. You understand? To a break of our lower low. You understand? So cool. So in essence, this is what this is what bearish order flow looks like. You understand? When a series of lower lows and lower highs is being created, then this is what bullish order flow looks like when a series of higher lows and higher highs are created, right? So cool. But in real life, we know this is not, the market doesn't move this cleanly. The market doesn't move this cleanly. The market doesn't move this cleanly. In real life, the market is messier than this. Understand? So that is why I'm going to show you how the reality of trading looks. You understand? So in real life, you might find that somewhere, somehow, this is how the real charts look. You understand? You have those small pullbacks, which are not like big enough for us to consider what as our swing pullbacks. You understand? So, but we'll get to that when we move on with the video. So cool. As you can see, whilst we're getting these small pullbacks, which are not swing pullbacks, we're making a series of what? Higher highs, higher lows, higher highs, higher lows in a bullish trend, right? These are considered as swing pullbacks. Why? Because they lead to what? Because they lead to uh, a swing pullback. You understand? So cool. Then this is a higher low because why? It led to the break of this higher high, right? So so cool. This is an example of what? Of thingy of a bullish trend in of a bullish trend in a realistic market. You understand? Where you have bits and like small bits of what? Of pullbacks, which aren't our swing pullbacks, right? So cool. When price breaks structure in a bullish trend, the higher low will be the lowest point before what? Before the break of structure, right? So basically, this this since you see that okay, cool, the market will move like this, the market will move like this until it ends up breaking structure. This is not your higher low, this is not your higher low, this is not your higher low. Your higher low will be what? Your higher low will be the lowest point that led to what? Your break of structure every time. You understand? Your higher low will be what? Your lowest point that led to your break of structure, right? So cool. And our goal as traders, our goal as traders is to what? Is to our goal as traders is to trade from the higher low, targeting what? The higher high, right? So our goal as traders is to be able to trade from this, targeting this. These are your bread and butter trades, right? So cool. Then for the bearish market, which is the exact opposite, which is what? In the bearish market, you have your lower low, then you have your minor pullbacks within, then your minor, like you see. So in your bearish trend, if you have these minor pullbacks, your lower high won't be this, won't be this, won't be this, but your lower high will be what? Your lower high will be the the highest point that led to what? That led to the break of your lower low. You understand? So yeah, the lower high will only be confirmed when what happens? Your lower high will only be confirmed when it breaks the lower low. You understand? So if it does something like this, if it does something like this, and it does this and it continues, this is not a lower high. You can't say, okay, cool, now price change trends because why? This is not a lower high because it didn't lead to a break of structure, right? Yeah. So that's it, guys. Your lower high will always be the highest point before what? The highest point before the break of the lower low, right? So cool. So our goal as traders in a bearish market is to trade from what? Our goal as traders in the bearish market is to trade from our lower high, targeting what? Targeting the previous lower low, right? So so cool. So then we get to the gist of trend changes. Like when do we confirm when the trend has changed, right? So in essence, what did we talk about in this feed? We spoke about price in an uptrend making higher high, higher low, higher high, higher low, higher high, higher low, higher high, right? And our higher lows being the lowest point before what? Before the the break of the previous higher high, right? And our higher lows being our strong structure because why? They led to the break of structure. You understand? The break of the previous higher high. You understand? So since they are strong structure, we believe that major banks or like major banks and hedge funds that bought here and led to this break to this high, which broke this high, have a vested interest in what? in their position, in the market not coming back to their position, right? So we expect these lows which led to break of structures to hold, you understand? So cool. So what happens if price does what? Price comes and violate this law. It means that, okay, cool, the big money players or whatever you want to call them, the market movers, whatever, the algorithm, if you're one of those, the algorithm is not in the market anymore. And what? And the trend might be changing. We might not be bullish anymore. Understand? The big money might not be bullish anymore because why? You have to understand for structure to be broken, the big money has to be there. Understand? So we expect that price shouldn't break these higher lows. You understand? Because why? They led to the break of structure and they are considered strong lows. You understand? But when when our strong swing structure gets broken, you understand? What does that mean? That symbolizes what? Trend change. You understand? So in such a market, in a bullish market, when our higher low gets broken, it symbolizes a trend change to what? To switching bearish. You understand? As I wrote here that higher low, the higher low is not established because price failed to what? To break this high, the higher high, you understand? Which does what? Which creates what? Which creates the higher high being the strong low, being the strong, the strong high, you understand? Which means that now we're going to have a strong high and a lower low, then get our pullback strong high, which lead towards to our break of structure. You understand? Then we get a pullback, then we get a pullback, then a strong high, which leads to our break of structure. You understand? So for us to confirm a trend change, you need to get what? A break in your strong high. You understand? So in this case, for us to confirm a bullish trend change, what needs to happen? Our lower low needs to break what? Our lower high, which did what? Which broke structure. So we believe that if something breaks structure, the major banks or your gurus or whatever you believe should have vested interest in price not breaking this high. And if price eventually breaks that high, it means that the major players are not there anymore, and what? Our trend might be changing, right? So when your lower high breaks your when your lower low breaks your lower high, that signals what? That signals that the market has switched bullish, and now we're in a what? A bullish market environment. Understand? So since this low took out this high, it becomes what? It becomes a strong low, and the market shouldn't what? The market shouldn't come back to break this low. You understand? So which means what? It's a strong low. Understand? So yeah, we only confirm a trend change when the previous strong structure. Let me show you. When the previous strong structure gets broken. You understand? That's when we only confirm a trend change. You understand? When the previous strong structure gets broken. Understand? Which is what we're seeing here. When the previous strong structure gets broken, that's when we confirm a change in market structure, right? So cool. Then, so yeah, guys, I'm sorry for that. I'm back with the second part of the video, right? So, what type of structure do we have? Another type of structure we have is internal swing structure, which is what I was talking about in these thingies, in this part when I spoke about those minor pullbacks, which are not as big for us to refer to them as things as as swing pullbacks, but they're not as they're small, but we shouldn't like refer to them as swing pullbacks. Those we call them internal swing structure, understand? Which is basically structure that lies or structure that forms the overall swing structure. You learn more about that, more in depth about that on our second part, which is the medium time frame, you understand, or like the multi time frame, you understand. So yeah, internal structure. This is small structure that is not big enough to be swing structure, but forms part of the overall swing run. You understand? I hope you understand that. Like, it's small structure that is not big enough to be to that is not big enough to be swing structure, but forms part of what of the overall swing run. You understand? They are oftentimes lower time frame swing structure. Understand? So basically, if you're in the daily time frame, like those internal structures are oftentimes 4 hour time frame swing structures. You understand? They are oftentimes lower time frame swing structures. We use them to we use them as an early signal. You understand that we might get an end to our pullback or to our continuation run. You understand? So cool. Let me show you what I mean by what I just said right now. Right. So cool. We see here that we have our overall trend and we have our internal swings here. Then what happens? We see that our internal low gets broken. Understand? And we see that we use them as what? We use internal structure as what? As a signal that our continuation or our pullback has come to an end. You understand? We get our uptrend, like that, then our internal structure, then we get our internal structure broken. You understand? That might be what? That might be an early sign that okay, cool, our internal structure, our pullback, our swing pullback is about to start. To understand, then cool, our internal structure keeps breaking structure, and you can see here pullback is too small to be seen as swing pullback. You understand? Then when that internal structure gets broken, you understand, when internal structure gets broken, it is a signal of a possible start to a swing pullback. Understand? So we broke it, then what happens? Then now the overall continuation of internal structure is what is bearish, facilitating what? The overall swing structure pullback, right? So cool. Then maybe let's say uh, then what happens? Uh, whilst internal structure is bearish, internal structure does what? Switches bullish. Now we see that here it switched bullish and signaled what? A bearish trend. No, not a bearish trend. It signaled what? It signaled a pullback of the overall swing structure. Understand? Then now, what did it do here? Here it broke structure. Now what might it be signaling? It might be signaling that okay, cool. Now we're getting what? Now we're getting a continuation. A continuation run. You understand? The internal switched bullish. The internal switched. No, wait. The internal switched bullish. This might be a signal that we are getting a continuation run towards what? Towards our higher high, which is what? Towards our swing high. Understand? And which would might end up what? Might end up breaking swing structure. Understand? Then annotation, like this is a quick side note. Internal structure may change. Like guys, internal structure may change anyway. Understand? So that is why it is important to use, because sometimes you may get that internal structure gets broken here. Then you're like, okay, cool. Uh, we're getting a pullback. Then what happens? Price continues moving high. Understand? That's why it is important to use multi-time frame analysis. It is important to use supply and demand. as confluences to show that okay, cool. Maybe let's say price mitigates something from the left, then it breaks internal structure. Understand? That gives you solid evidence that okay, cool. We mitigated past supply. You understand? Now, where internal structure is getting broken, that might be a signal that okay, cool, like we might be getting I think we might be getting a pullback. You understand? You don't just use it in isolation. You might get chopped sometimes because you might see that price might come back, sweep the liquidity behind this low and continue. You understand? So use it in confluence with liquidity concepts, supply and demand, whatever you use, Fibonacci levels, whatever you use to trade, you understand? Use it in confluence with that, you understand? Premium discount, uh, yeah, support and resistance, whatever you use to trade, use it in confluence with that, you understand? So cool, yeah. Then what happened here? You use it in confluence as well, because sometimes you might get that, okay, the overall internal structure is what is bearish. Then it comes here, it sweeps this high. Then you're like, oh yeah, Sipo said if it breaks structure like this, we're expecting a continuation. Then you're looking for buys. Then it doesn't do that. Then it comes back, it sloshes you, it goes down. Understand? Use it in confluence with something else. Then maybe let's say it mitigates a demand in our internal swing structure. Understand? Let's say it mitigates a demand zone. Then what does it do? Then it switches bullish. Then you know, okay, cool. We mitigated a higher time frame demand. Boop, 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 boop. Like, then internal structure switches bullish. Now, what might we be expecting? Now we might be expecting for price to do what? To continue to do what? To break the underlying higher high. You understand? So yeah, if you didn't understand that, feel free to go back because I know I said a lot in a short time. Feel free to go back and re-listen to what I said there, and trust me, you understand what I mean. Understand? The more you listen, the more But we'll get to the charts just now. So yeah, guys, that is it for internal structure. Understand? Internal structure. We just use internal structure to give us a signal that okay, cool, price might be starting to price might be starting a pullback or something like that. You understand? So yeah, guys. So yeah, now it is time to get to the real charts now. Yeah, I'm gonna take you to the real charts on the next slide. Stay with me. Yeah, guys. So we're back on the charts now. We're on the real charts. You see how this chart looks messy, but look how we paint it. So cool. When you're doing market structure, make sure you go back like long enough so that you can see that okay, cool. You know, you understand. So yeah, guys. So this is what we're looking at right now. You understand? We're going to go back. Normally, I start on the weekly time frame, but for the purpose of this video, I'm gonna use the daily time frame. Understand? So we got our pullback here, right? So we got our pullback there. Then we got our break of structure here, right? We got our break of structure there. Okay, let me use this one. Oh, my. We got our break of structure there. Let me just use this, right? Then we got our pullback here. Then we got another break of structure here, right? Meaning that this, meaning that this is a strong high because why? It led to the break of this low. You understand? So cool. Then what happened? Since this is a strong high, it shouldn't get broken, right? What happened? Price came and broke it, right? From our thingy, from our boss, let me annotate that as boss. from what we spoke about in those scenarios, what happens when price breaks a strong high in a bearish market? What happens when breaks a strong high in the bearish market? A strong high, remember, is a high that led to a break of structure. What happens when price breaks such a high? Hopefully you said, hopefully you said, when price breaks a strong high, that symbolize what? Trend change. Understand? So now we're not, since we've broken a strong high, we're not in a bearish market state. We've switched to what? A bullish market state, right? So cool. Now that we're in a bullish market state, what do we see? We see that price keeps moving up bullish. You understand? Don't mind this, guys. Don't mind this. These are small pullbacks, which is what I was talking about when I was talking about internal, internal swings. They are small pullbacks that form part of what? Of this continuation. You understand? Only when those small pullbacks get broken do we consider what? That as a swing pullback. You understand? So cool. We got a pullback and a break of structure. This became a strong low. Understand? Because why? It led to a break of a high. Understand? So cool. This is a strong low which led to the break of this high. So currently, in this case, we were within this swing structure here, with this being a higher low and this being a higher high. Price gave us a pullback, and after price gave us a pullback, what did it do? Price in the internal switched bullish, then did what? Then gave us what? A break of what? Of that higher high. You understand? Gave us a break of that higher high, gave us a break of that higher high. You understand? So in that case, now where is our thing? Where is our higher low? Our higher low is the lowest point, which what is the lowest point which led to the break of that high. You understand? So where is our lowest point which led to the break of which led where is our lowest point which led to the break of that high? This is the lowest point which led to the break of this high. You understand? So cool. Then what happened? We got our pullback. After we got our pullback, our inter or we mitigated something to the left. Our internal switched what? Switched bullish, then did what? Then went up to break structure. Understand? To break what? This high here. To break this high here. Understand? To break this high here. Understand? So here's a scenario for you. I want you to pause this thing. Be honest with yourself, right? Pause this thing and ask yourself, between these two structures here, which one is a higher low based on what we said? I'm going to give you 2 seconds. Hopefully you said this one. Hopefully you said this one. Because why? What is a higher low? A higher low is the lowest point which led to what? Or is the lowest point before the break of structure, or the lowest point that led to the break of structure. This is not the lowest point that led to the break of structure, because when price gave us a pullback, price probably mitigated something here. The internal switched here, which was the lowest point, which ended up what? Which ended up breaking structure. So the lowest point that led to a break of structure is here, right? So cool. That was the lowest point that led to the break of structure. Understand? Which ended up what? Be this being a strong what? This being the strong low because it led to the break of this high. So cool. From what we've learned, a strong low or a strong high in a bearish market doesn't have to get broken because why? If larger institutions entered from this strong low, you understand? They have vested interest in price not coming back to their what? To their positions, right? So cool. So if that strong low eventually gets broken, understand what does that signalize? Give you all 2 seconds. If you said a trend change, it symbolizes what? A trend change. Because now this strong low that led to the break of this high is has been taken out, right? And in this leg here that led to this break of structure, where is our strong high? Is it this one? Is it this one? Is it this one? Is it this one? Or is it this one? Hopefully you said the strong high is this one, which is what? The highest point before the break of structure on a bearish market. You understand? So this is our break of structure. Then what? Then this is the highest point before our break of structure. So this is what? This is our strong strong high. You understand? So cool. Then after our break of structure, what do we expect? We expect a pullback and mitigation of something to the left. Then what happened here? As we spoke about with our internal structure. After a break of structure, how do we confirm a pullback from what we spoke about? Remember, how do we confirm a pullback? We confirm a pullback by what? By we spoke about this minor structure which is not as big to be considered as swing pullback. Understand? So when this minor structure gets broken, what does that symbolize? It symbolizes a potential pullback. So here, so what happened here? So here, what happened was we got a break of this minor pullback high. Understand? Which symbolized what? Which symbolized that, okay, cool, our internal pullback, our pullback might be starting, right? So from here, our pullback started. So currently we were playing within this range. I don't wanna show this part. Currently we were playing this within that range, within our strong high that led towards to our break of structure and the internal that switched that symbolized a potential pullback, which is our thingy, uh, lower low. Understand? Lower low. Understand? So after we got the thing, the internal that switched bullish, that symbolized what? That symbolized potential beginning of our thing, our swing pullback. Then cool, the swing structure pulled back, as you can see, pulled back, pulled back. Then what happened? We mitigated something to the left. Confluence, the confluences that I was talking about. We mitigated something to the left. Maybe let's say we mitigated this zone here to the left. Then what happened? Then what happened? our internal structure. No, man. Then what happened? Our internal structure right here switched bearish to signalize what? To signalize that okay, cool. Since we've gotten our pullback and we've mitigated something, we might be ready for what? Remember that the thing. Remember that utopian graph, the clean graph. We might be getting what? We might be getting a continuation of the underlying trend, right? Then what happened? Price came down. I understand. Price came down with what? A continuation. But now what happened again? Our internal gets broken again. You might be asking yourself, okay, cool. How? No. The market does its thing, guys. The internal gets broken again. So now, since we're within this whole swing structure, right? Since we're within this whole swing structure, let me ask you a question. Since we're within that whole swing structure, and now we see that, okay, cool, we've been getting a continuation run, but now it has quickly switched bullish. Does that mean that the overall market is bullish now? Hopefully, you said no, because why? Our strong high is still intact. Understand? We don't confirm a trend change until our strong high or strong low gets broken, right? Our swing strong high, understand, gets broken, right? So cool. Price switches, price switches bullish here for a potential what? A potential deeper pullback. Then what does price do? Price comes, switches bearish again for a potential continuation, right? So right, the internal does what? The internal switches bearish again, right? So since the internal switches bearish again, what happens? We end up getting another break of structure, right? So now, since we've gotten our pullback and the internal switched bearish to show that we're getting our continuation, and we got our continuation that led to the break of structure. Out of all these highs, which one is the strong high? 3 seconds. Hopefully, you said the first one that is there on top, right? Because why? It is the highest point that led to what? It is our highest point that led to the break of this low, right? It is our highest point that led to the break of this low. Then after the break of structure, what did we get? We got our internal structure switching bullish to show what? Facilitation of our to show facilitation of our pullback, right? So cool. Internal structure switched bullish to facilitate our pullback. We got our pullback. What did price do? It violated our strong high, right? Since it violated our strong high, what do we say? If our strong high gets broken, that's a signal of what? Trend change. So yeah, guys, if you guys like if you feel like you didn't understand this video, there was too much information at once, please go back, rewatch the whole video. Go back, rewatch the whole video, and trust me, there's a lot to learn. The more you watch it, the more it sinks in, the more you go back to your own charts and try to identify such things for yourself. Journal it, and trust me, guys, Like there's no way you won't learn from this video. Like there's a lot to learn from this video, trust me. So be sure to backtest this yourself. Be sure to compare it with your strategy. Take what's valuable and leave out what you feel like doesn't resonate with you, right? So yeah, guys, it's your boy Sipo. Be sure to stick around for part two. Might be dropping a vlog this week. Even though it's a hectic week, I'll be studying a lot, but might be dropping a vlog for you guys. Might be dropping a vlog for YouTube, right? So yeah, guys, I hope you enjoyed this video and I love you guys. I'll see you on the vlog. Yeah, because I'll post a vlog before I post part two. So love you guys. See you on the vlog and be sure to wait for part two on the market structure series. Thank you guys. God is love.